Hi traders, welcome to another episode on the trades we missed last week. So this is the 20th episode and we'll be looking at what happened from Monday 23rd of June 2025. So the first trade that was cited on Monday, as Monday opens, was a bullish trade. So we have first our fair value gap. This is a fair value gap, and before this fair value gap you can cite a mitigation block here. So as price cross past this block, we can use this fair value gap as our entry for a bullish trade. So it goes like this. We have a long position like this. From this fair value gap, this would have been our entry, or we can use this order block here. So this is it, using this order block, and our stop loss will be right below that order block here, and our take profits would be at this next high over here. We can as well use this high, or because price has crossed this high before touching this fair value gap here, so would use this high as our take profit. So this high would be our take profit, or this high here. So let's use this high at this spot. So this would be our take profit, and our take profit would be a profit of 4.3 risk to reward ratio for a bullish trade on Monday. Our next trade is also a bullish trade. This is our trade number 2, and our trade number 2, when price taps this fair value gap, we have a bullish move. Then we can cite another fair value gap, and after that fair value gap we can cite a break of market structure here. You see how price breaks this high here. This is a high on a lower time frame, like our 3 minutes time frame. Bear in mind we are on our 5 minutes time frame here. So this is a fair value gap also cited here. So our strategy remains a fair value gap, then a fair value gap, and a break of market structure. So we have another fair value gap here, which will serve as our entry. So we have our bullish trade here. So this is how we take our bullish trade: a long position from this fair value gap or this order block right here, and our stop loss would be below that low that created a fair value gap for that bullish trade. Our take profit can be right before a major fair value gap like this one here. This is a fair value gap, so before this fair value gap you can take your profit, or this one here. You can also take your profit before this fair value gap here for our number 2 trade. And you can see how price rallied to the upside, breaking above this previous high here. But on the safe side, you can use this fair value gap. So using this using this previous high, we have a trade of 8.19 risk to reward ratio, or this fair value gap here, giving a risk reward of 4.33 ratio. The next trade is our trade number 3. Our trade number 3 is also a bullish trade. Now you can see how we are following the market's order flow. We have a fair value gap here on our 5 minute time frame still. As price taps into this fair value gap, created for us a fair value gap here and a break of market structure also. So as price taps into this fair value gap, then creates a break of market structure, we can use the next fair value gap or order block as our entry. Bear in mind, if you see an order block, we should also have a fair value gap checked. So this fair value gap or this order block would be our entry. Using this order block, you can go for a higher risk to reward ratio. So this is it. For a long position, we'll tap this one like this, our entry and our stop loss right below this low that created this fair value gap here. This is the fair value gap. This is the fair value gap. Then this order block. So we can as well use this order block as our entry for a higher risk to reward ratio than just using this fair value gap. You can see we don't have as much risk to reward ratio as we once had when we put it here on our order block. So now for our order block, as price taps into this order block, our entry is being triggered, or also triggered manually by clicking your buy. So we have a risk reward ratio of 2.7 if you use this previous high here, and you can see our price went down back to tap into that order block again and push forward to rally to the upside, reaching this maximum TP, giving you a 6.37 risk to reward ratio. So that was our trade number 3. Our trade number 4 is right here. You have a trade number 4, and this our trade number 4 is our first bearish setup that we can cite. So we have a bearish setup as we have a fair value gap here. This whole fair value gap is being spotted, so you can see how price reacts from this fair value gap. After price reacted from this fair value gap, then we cite for a bearish trade, or in other words, we cite for a bearish fair value gap for our entry. So as we have cited this order block, then this would have been our entry, and you see this one is our inducement. Our entry will go like this. Our stop loss would go above this previous high that created this fair value gap, and our take profits would be at this previous low here. So you can see this previous low is being cited for our maximum TP, and this is giving you a risk reward of 3.25. But if you had used this previous low here, this would be giving a smaller risk reward of 1.86 for the traders that go for a 1:2 or 1:1 risk to reward ratio. So the next trade we have is our trade number 5, and it's right around the corner. So let's put this one to the side here. We have a fair value gap that's been respected by the market. You can see our market respected this fair value gap, so we would have to watch what markets want to do here by waiting for a break of market structure and a fair value gap. You can cite a fair value gap here, so it's better we use the order block before that fair value gap, because if we use the whole fair value gap, it will give us a smaller risk to reward ratio. So it's better we use the order block. As price taps into this order block, then would take a long position here. Our stop loss right below this low that created that fair value gap, and our take profit is right at this high that price has reached before. So we have a risk reward of 3.19, and that was our number 5 trade. The next one is our trade number 6, and our trade number 6 is being cited on Thursday. So this is our trade number 6, and you can see how price reacted from a fair value gap. You can see before this fair value gap, we have an order block here. So the whole zone would be highlighted. As price respected this fair value gap once, there was no break of market structure, nor was there any fair value gap. Price reacted from it again, and now we have a break of market structure here. We have a break of market structure here. Price closed above this high here and created for us an order block followed by a fair value gap right here. So this fair value gap is our confirmation that, oh, price wants to go to the bullish side. So now we take our entry at this spot here for a long position. As price taps into that area, our entry is being triggered, and our take profit would be at the previous high. So this is our previous high here. We can use this as our previous high for a risk to reward of 3.68, or at this previous high here. We have a risk to reward of 5. The next on our list is our trade number 7. So this is our trade number 7. After citing a fair value gap right here, you see how price reacted from that fair value gap on our 5-minute time frame. Let me take this one out so you guys can see it. So we have a reaction from this fair value gap. As price taps into it, then we look for a break of market structure. Now we have a break of market structure here. Market broke above this previous high and also created for us a fair value gap, and this order block would have been a very good candle to buy from. So as price taps this order block, because there's a fair value gap here, so it will create that push for a bullish trade. So we have a long position from here, and our stop loss is at this previous low that created that fair value gap. Our entry right at this order block, and I'll take profits the previous high. So we have our previous high for our take profit, giving us a profit of 3.3 risk to reward ratio, because we have a fair value gap, and a break of market structure. So on to our trade number 8. So we have our trade number 8 at this corner here. We have a fair value gap here being cited. There's a fair value gap. This is a demand area. So we anticipate that price will tap into this one and give a reaction. Now price has reacted from this fair value gap as expected and broke above a previous high here. You can see the break. That was our break of market structure, and we have a fair value gap here. So this would have been our entry for our number 8 trade. Our long position will go like this at this fair value gap here, and our stop loss right below this low that created that fair value gap. Our take profit should be at this previous high or this fair value gap. You can see this supply area. This fair value gap is an indication that price might want to tap into it and move bearish. So be careful not to go beyond this area here. As you can see, price already give you a 4.23 risk to reward ratio. You can see price tapping into that zone and going back down. So this is a very powerful zone. And the next one we have is our trade number 9. There is a supply power here. There's a supply power here. So you can use this fair value gap. As price taps into this fair value gap, now there's another fair value gap here, and you can see that we have a break of market structure to the downside. So we anticipate that price will tap it, and at this take profits, we have our entry already. So this is a bearish trade, just like so. We have a stop loss right above this high that created that fair value gap, and we have our entry, and our take profit is at this one here, this low before this fair value gap, because price can also respect this fair value gap again because it's not yet fully mitigated. So we have a 4.27 risk to reward ratio on our trade number 9. So the next one we have is our trade number 10. This will be our number 10 trade, and we have a fair value gap cited here. This is a fair value gap cited here. Price taps into this fair value gap that was cited and give us a break of market structure to the downside. So we anticipate that price will come back again to that fair value gap that was created here. So you can see it. This is a fair value gap that was cited along with this other block. So this would have been our entry, just like so. So this area will be our entry, and our short position will be like so. Our stop loss right above this high that created that fair value gap for our entry. So as our entry is being triggered, then we have a move to the downside. You can see how price rally all the way to meet a previous low. This will be a previous low that price has taken out, so giving us a profit of 2.91 risk to reward ratio. You can also see our price rally to this low here, and this can also give you a risk to reward of 3.62 risk to reward ratio. So taking this one out, you can also see a reason for entry at this spot here, because we have a fair value gap here. This is a fair value gap here, so we can use all like this. Using just the order block, we can have a higher risk to reward ratio. Since we have our trade here, then we have a re-entry here. So like so, we have a short position, and you can see our risk to reward ratio, given that we take our TP to that previous low, we have for ourselves a 3.02 risk to reward ratio for our trade number 10 re-entry. So guys, so that was the last trade for this episode. Stay tuned and keep backtesting. We'll meet on our next episode on the trades we missed last week. Peace.